This is a video demonstration on the statement of cash flows. In this video, I'm going to work the solution to example number 9. This example involves the ABC Company, and the following information has been provided. First of all, we have a series of items of miscellaneous data. Then we have a copy of the comparative balance sheet for both 2012 and 2011. And then we have a copy of their current income statement for the year ended December 31st, 2012. Under the requirements, there is simply one requirement, and that is to prepare the statement of cash flows. Now, in order to prepare the statement, we're going to utilize a spreadsheet. I'm going to have copies of this spreadsheet available on the class website so that you could actually use this, and that way you'll have the titles already filled out for you. And I'll have both an Excel version and a PDF version in case you just want to print it out and actually write on it. But of course, we have the name of the company, statement of cash flows. It is for the year ended December 31st, 2012. All the formatting has been prepared in advance. All the titles have been prepared. But you'll notice here next to the statement of cash flows it says direct method. There are actually two different methods of preparing the statement. There's a direct method, and then there's also an indirect method. And we're going to learn both because both methods are GAAP approved, and any company can pick one or the other method to use. So it's good to know how to do both of these. Also, in order to do the statement of cash flows, at one point we're going to utilize certain formulas. These formulas are in the textbook, and I also talk about some of these formulas in the video lecture on the statement of cash flows. But all these formulas have been consolidated into this one formula sheet, and this will also be made available on the website. And we may not necessarily have to use every single one of these formulas. It really just depends on the size and the complexity of the company, but we have a formula here for every possibility. Now, on the statement of cash flows, I'm going to work on the direct method version first. Now, the first thing we want to work on is actually at the very bottom of the statement. There's a section down here that involves cash, and we want to fill out this section first. The reason we do this first is because this will provide us with a check figure that we could then use to check against our other calculations. Now, this bottom section says net increase in cash, cash beginning balance 2012, and cash ending balance 2012. So we need to find the information in regard to cash. Now, cash is an asset, and assets are shown on the balance sheet. So I'm going to look at their comparative balance sheet, and the very first asset under current assets is cash. Now, last year, the previous year in 2011, the final balance of cash that they had was $72,000. So if they ended 2011 with $72,000 cash, that also would have to be their beginning balance for 2012. So where it says cash beginning balance 2012, that's going to be the $72,000. Now, in the year of 2012, the cash amount that is shown is $887,200. So that's going to be the ending balance for 2012. So cash ending balance, $887,200. Now, the increase in cash is going to be the ending balance of cash minus the amount of cash that they had to begin with. So the net increase in cash is $815,200. And that's a very important number because later on we'll be able to use that number as a check figure. Now, once I've completed that section, the next thing I want to work on would be the investing activities. The information that I need for this will be located under miscellaneous data. So up here on my miscellaneous data, the very first item says that they sold equipment for $31,000 cash. So right here where it says cash received from the sale of equipment, that's going to be $31,000. The next item on miscellaneous data says that they purchased equipment costing $125,000 with $25,000 cash and $100,000 trade-in of old equipment. Now, of those three amounts, the only amount that I'm actually interested in is the actual cash amount. So they actually spent $25,000 on that equipment. So where it says cash paid for equipment, that's going to be $25,000. But I'm going to put that as a negative. And the reason is because on the statement of cash flows, we're going to have certain inflows and certain outflows. So anything that says cash paid, that's an outflow of cash, so that's negative. So ultimately, between these two items under investing activities, overall I come out with $6,000 positive. Now I'm going to work on the financing section. And again, the information that I need is located on miscellaneous data. The next item says they borrowed $7,000 cash by signing a note payable. So right here on cash borrowed on a short-term note, that's going to be $7,000. The next item says they paid $39,000 cash to reduce long-term notes payable. So on cash paid on the long-term note, that's $39,000, but that's going to be negative because that's cash paid. The next item says they issued 1,500 shares of stock at $12 a share. Well, 1,500 shares of stock times $12 a share, they brought in $18,000 from that. And then the last item on miscellaneous data says that they declared and paid $6,000 in cash dividends. So for cash paid for dividends, that will be $6,000, but that's a negative $6,000 because that's cash paid. So ultimately, we have four items under financing. We will net the four items together and see how we come out in terms of overall on financing. And we actually come out negative $20,000 on financing. So that completes the investing section, the financing section, and the cash section. Now, the great thing about completing these sections first is these sections in particular are actually going to be exactly the same on both versions of the statement. So even though I'm working on the direct version, over here on the indirect, I can go ahead and paste all of that or just copy it over again because that will be exactly the same on both statements. So really what that leaves is the operating activities section. I need to do that section on both statements. Now really I could do these in either order, but I'm going to work on the direct method version first. So we have cash flows from operating activities. The very first item says cash received from customers. I'm going to have to calculate that. So I'm going to look at my formulas to see what it says about the cash received from customers. So under my direct method formulas, the very first one is cash received from customers. It equals the sales, that's a starting point, and then I have to look at accounts receivable. If there's been a decrease, that will be added. If there's been an increase, that will be deducted. So that's the proper way to calculate the cash received from customers. But the starting point is the sales. Now to do these calculations, I'm going to go down here to the bottom and do the calculations underneath the statement. So I'll show my supporting calculations down here and then plug my answer back in on the statement. So the first thing that I need to know the sales. Well, sales, that has to do with revenue, so that'll be located on the income statement. So down here on my income statement, the very first item, sales, that is $1,670,000. So I'm going to write that down because I'm going to be using that on my calculations. $1,670,000. Now, according to my formula, I then have to consider the accounts receivable. Now, accounts receivable, that's an asset That's going to be on the balance sheet. So right here is my accounts receivable. But what I want is the difference. So back in 2011, they actually had $83,200 in receivables. Now they only have $75,000. So that's a difference there between $83,200 and $75,000. So in that case, $83,200 minus $75,000, that's a difference of $8,200. Now, that represented a decrease in the accounts receivable. So according to my formula, should I add or subtract that? According to the formula, it says a decrease in accounts receivable is to be added. So I'll just simply add that. So I'll add these two numbers together, and I get $1,678,200. So that's going to be my cash received from customers. So the key to that is just utilizing your formulas. Now what's the next item? Cash paid for merchandise. I want to take a look at that formula. That one's right here. Cash paid for merchandise. I'm going to start off with my cost of goods sold. That will be located on my income statement. Right there is cost of goods sold, $410,000. So I'm going to write that down. Now, on this $410,000, notice that on my income statement, it shows that as a negative, and that's just basically because it's being deducted from the sales on that statement. But for calculation purposes, I'm going to use the absolute value, which is positive $410,000. Then according to my formula, I've got to look at a couple of different things. First of all, I've got to look at the merchandise. Did the merchandise change? Is it an increase or a decrease? Well, merchandise inventory, that's an asset. So right here it is, merchandise inventory. It was $265. Now it's only $242,000. So it went from $265,000 to $242,000. So that's a difference of $23,000. Now, is that an increase or a decrease? That's a decrease because it went down from the previous year. So according to the formula, a decrease in merchandise should be deducted. So that'll be a negative $23,000. Now the next component on the formula is accounts payable. We need to take a look at how accounts payable has changed. So right here's the accounts payable. It used to be $96,000, and then it went down to $17,500. So it's a decrease, but it's from $96,000 down to $17,500. So $96,000 down to $17,500. That's a change of $78,500. Now, what do I do with the decrease in accounts payable? According to this formula, positive. So I'll leave that as a positive $78,500. So now I'll just total up or net all these items together, and I get $465,500. So that's what I'm going to use on my statement. But I'm going to put that number as a negative. Why is a negative? Because it's cash paid for merchandise. So usually that's one of the things that is the most confusing about this, because that's a perfect example. You know, this $410,000 was negative on the income statement. I used it as a positive on my calculation for the absolute value. This answer, I got $465,500, but notice I put that amount as negative. That's an outflow of cash. So you got to be careful, very careful about your positive and negative signs.